Imagine you invested $1,000 in a stock. At first, everything feels great. You watch the price go up. You check your portfolio and feel smart. You start imagining what that investment could become in 5 or 10 years. Then, one morning, you check your phone. Your investment is down 10%. You tell yourself, it's probably temporary. Then it falls another 10%. Now you are checking the price every hour. And suddenly a question enters your mind. Should I just sell before this gets worse? This is where investing stops being about numbers and starts becoming a battle with your own psychology. If you are learning how to invest in stocks as a beginner, understanding this may be more important than knowing which stock to buy. Because volatility doesn't just move your portfolio, it moves your emotions. When prices rise, we become confident. When prices fall, we suddenly question everything. And the strange part is that losing money often feels much worse than making the same amount of money feels good. That's called loss aversion. Your brain is naturally designed to pay enormous attention to potential losses. So when the market falls, your brain may not be asking, has the long-term value of this investment changed? It may simply be screaming, get me out. But here's the mistake. A falling stock price is information. It is not automatically a command to sell. Before making an emotional decision, go back to the reason you bought the investment in the first place. Did the business fundamentally deteriorate? Did your original analysis turn out to be wrong? Has something important changed? Or did the market simply become more pessimistic? Those are very different situations. And this is where disciplined investors separate themselves from emotional investors. Holding does not mean blindly refusing to sell. Holding means having enough discipline to investigate before reacting. Imagine the same investor watching their stock fall 25%. Instead of immediately selling, they step away from the screen. They review the business, they review their original reasons for investing, and they ask one simple question. If I didn't already own this investment, would I still want to buy it today based on what I know now? That question can cut through a lot of emotional noise. Because successful investing isn't about never feeling fear. You will feel fear. The difference is whether fear gets to make the decision. The next time your portfolio turns red, remember this. The market is testing more than your investment. It is testing your patience, your preparation, and your ability to think clearly when everyone around you is becoming emotional. Volatility is uncomfortable, but emotional decision-making can be far more expensive. If you want to become a better investor, don't just learn how to analyze stocks. Learn how to analyze yourself. And that's where real investing psychology begins. If you want more practical lessons on how to invest in stocks as a beginner, subscribe and keep learning.